Welcome to China Perspectives, a podcast on the latest economic and credit market developments in China, featuring experts from both within and outside of Fitch Ratings. As the first international credit rating agency to set up an office in China, Fitch offers the unparalleled experience and insights into the market.
Hello, everyone, and welcome to China Perspectives. My name is Jeremy Zook, your host for today's episode, and Fitch's lead sovereign analyst for China. Global trade issues have been top of mind for investors following U.S. President Donald Trump's return to office in January and his efforts to reconfigure U.S. trade policy through his active and aggressive use of tariffs. Unlike during the first term, where China was the key target of U.S. tariffs, Trump has targeted all U.S. trading partners, particularly those in East and Southeast Asia. Given the significant shifts in U.S. trade policy, there are likely to be implications for trade flows between countries outside of the U.S. as well. In today's episode, we will take a look at China's trade and investment relationship with ASEAN in particular, which has grown significantly over the last decade, discussing the outlook and how it's likely to be affected by developments in U.S. trade policy. Joining me today to discuss this topic is Chris Clague. Chris is an associate fellow in the Geoeconomic and Strategy program at the International Institute for Strategic Studies. He also works as an independent advisor to governments and multinationals on trade, supply chains, and geopolitics. Prior to these roles, he worked at the Economist Intelligence Unit and Flexport, a trade and logistics startup. Thank you for joining us today, Chris. It's great to have you here.
Thank you for having me, Jeremy. Just a quick disclaimer before we begin, that while I'm an associate fellow at the International Institute for Strategic Studies, as you note, the views expressed here are my own and not those of the Institute. So with that disclaimer out of the way, I'm happy to take your questions.
Yeah, let's dig in. But I guess before we go into some of the specifics, it'd be good to just start with kind of a general background overview for our listeners on some of the recent developments in China's trade and investment trends with ASEAN over the past several years, and kind of what are the key drivers of these trends?
Sure. I think, as is fairly well known, trade and investment have both been increasing. On the trade side, it was and still is dominated by Chinese exports of intermediate goods to ASEAN countries for final assembly and export to third markets, primarily the US, but also the EU, I would say. The economist Richard Baldwin had an interesting paper on this topic earlier this year, essentially calling China the OPEC of intermediate goods. It is the world's main supplier of immediate goods. Those have gone primarily to ASEAN and the US in recent years, with Europe further down the scale. But what we're seeing, or have been seeing over the past 10 to 12 months, is an increase of Chinese exports of finished goods to ASEAN, especially consumer goods. This wasn't too difficult to foresee once the US-China trade war, I guess 2.0, began. That excess supply of consumer goods that were no longer bound for the US, or Chinese firms were not cut out of the US market, but it made it far less appealing, and US consumer demand fell off, save for the front loading of Chinese exports to the US to avoid the tariff escalation. So reports about this started to pick up, I would say, in March of April of this year. So this has created political problems in the region, which I think we'll get to later on. I think it's essentially been called ASEAN's China shock, based on the paper by the economist David Autor on the China shock to U.S. manufacturing about 20 years ago. So we're seeing prices fall in countries like the Philippines and elsewhere, and turmoil in labor markets in Indonesia and Thailand. I'm not sure that this is going to stop anytime soon, although Malaysia, Indonesia, Thailand in particular are starting to take some measures to push back on this surge in Chinese imports from their perspective, this surge in Chinese imports of consumer goods. On the investment side, FDI, especially from Chinese manufacturing firms, has increased markedly in the last couple of years. It's a bit difficult to determine where China ranks among the origins of FDI into ASEAN, because the official data coming from the ASEAN Secretariat, for example, doesn't take into account Chinese investment that's being routed through Hong Kong. But there's no question that there's a lot more Chinese FDI going into countries in the region. In terms of the countries that it's bound for, Vietnam is the obvious one and is getting the most attention. But Indonesia has been a major recipient of Chinese FDI, especially in the automotive sector, but also with textiles and other sort of low end manufacturing. We're also seeing more Chinese investment in ICT manufacturing in ASEAN, including sort of low end chips and consumer durables, particularly in Thailand. To get back to the one of the main parts of your first question is what are the key drivers? Obviously, as you said in your introduction, US China trade war, trade conflict, whatever you'd like to call it, is the key driver for this. I think it's also being driven by rising cost pressures in China. Wages are rising. So Chinese manufacturers would likely have been looking for other places to locate their manufacturing or their export bases, and ASEAN was the natural choice for that. Another driver that's a little bit difficult to disentangle from the first two is the extent to which Chinese investment is going into ASEAN to meet regional domestic demand. ASEAN has been growing. It's a huge consumer market, 700 million people. So it would make sense for Chinese firms to think about investing there for to meet local consumer demand. But as I said, that's a little bit difficult to disentangle at this point.
Yeah, thanks. A lot of great information in there. And I want to dig into a few of those specific points as we go on in our conversation. First, what's been, I guess, a bit of a hot topic, especially on the US side when it comes to its negotiations with other countries, is transshipments. How much of kind of the increase in trade flows from China to ASEAN is a reflection of transshipments? Or, are we seeing quite a bit of material value added transformation now occurring in some of these ASEAN countries? And so it's not really a story of transshipments per se in a pure sense.
The short answer is it's both. Let me take the transshipment part first. The Trump administration has yet to define what constitutes a transshipment. The old definition is basically routing a finished product from China, in this instance, through another country, ASEAN, as we're discussing now, and allegedly mainly Vietnam, so as to avoid paying a higher tariff. So, for example, China takes a refrigerator, ships it to Vietnam, repackages it, and then it enters the US as a Vietnamese product. That's traditionally what is considered transshipment, at least for the purpose of tariff evasion. Now, when I was with the Economist Intelligence Unit, I led a multi year project on illicit trade that included the issue of tariff evasion for legitimate goods and then for avoiding customs inspections for counterfeit goods and the like. The definition of transshipment at the time, now what people are calling the old definition until a new definition from the Trump administration is released, was one of finished goods. Now, these are notoriously difficult for custom agencies to track and interdict. The daily throughput at the busiest container ports in the US, for example, is in the hundreds of thousands of TEUs. Now, short of a massive increase in manpower, there's no realistic way to inspect every shipment and therefore to know how many goods are being transshipped through Vietnam. And of course, they're disguised through various means. AI might help the US in this regard, interdict more transshipments, but it's really hard to know. It's certainly happening. There are some estimates, primarily again using Vietnam, show that transshipments of finished Chinese goods is happening, but not quite to the extent that the US administration is alleging. So that's one part of it. And then in the material transformation question, you're getting into the issue of rules of origin and what constitutes material transformation. This gets back to my initial answer of China's place in as a global superpower when it comes to intermediate goods. So China ships parts and components to Vietnam or Indonesia or Thailand, and they go into the production of a finished good. What constitutes a material transformation? This is without getting too much into the weeds here. There are different rules of origin. There are hundreds, if not thousands, of rules of origin determined by various trade agreements. So sometimes it's 40% local content, sometimes it's 50. But there's no question that this legitimate supply chain trade is still part of China's exports to ASEAN and ASEAN's exports to the US. It's just very difficult to determine the precise balance. I would say the legitimate supply chain trade is still a big part of that.
I guess sticking with this 40% transshipment tariff that the Trump administration has put forward and the challenges that you mentioned around kind of monitoring and enforcing that, what kind of impact might that have on Chinese firms and their expansion of supply chains in Southeast Asia? I mean, is this something that will have kind of a significant impact on their decision making when it comes to investment?
Well, it's an interesting question. Well, again, transshipment hasn't been defined, but let's assume what they really mean is rules of origin and material transformation. Transshipment, I don't think would dissuade, because that's not really the supply chain trade, is it? That's just taking one finished good, sending it to another country, repackaging it, and trying to exporting it to the US. But if you're talking about legitimate investment for the sake of expanding supply chains, obviously it could create a problem if the Trump administration falls down on the side of any sort of Chinese inputs into any product that is being exported from Vietnam or Indonesia to the US is going to face this 40% tariff. Then it very quickly makes that strategy not useless, doesn't render it useless, but it renders it a lot more profitable, shall we say. I don't think it will dissuade firms from trying, at least, because there is going to be, I think, almost inevitably a trade off between the penalty that they might face from disguising local content versus Chinese content. And this gets back to enforcement measures and the levels of the penalties that companies might face if they're caught. And interestingly, I think it was announced at the end of August, the US Department of Justice and the Department of Homeland Security set up a joint task force to combat this sort of trade. Obviously, that's very early days, and they have a huge task ahead of them. So, whether being able to inspect every shipment coming in is nearly impossible. AI may help again, but it's really a trade off between, do you want to take the risk of being caught for that sort of thing? I mean, that's leaving aside even the importer side in the US, who are probably going to be a lot more hesitant to run afoul of US laws. But I think in the short term, it's probably not going to do much to dent Chinese investment in the region. The other thing that we haven't discussed yet is the extent to which Chinese firms investing in ASEAN for export back to their home markets. This doesn't get a lot of attention, and maybe rightfully so, but it's certainly a consideration for some Chinese firms. I actually will be working on that a little bit in the coming months.
That's very interesting. Yeah, I haven't dug into that in too much detail myself. But yeah, I suppose that will be an interesting driver of investment and trade flows going forward, potentially. I want to take maybe a step back and focus more broadly on kind of the China plus one strategy and how you kind of see that playing out in the coming years following this pretty significant reorientation of US trade policy. Of course, in first term, Trump was primarily focused on China. So moving supply chains out of China made quite a lot of sense. This time around, ASEAN has also been targeted. Countries in the region will see about 19 to 20% headline tariffs. China still does see a higher tariff rate at around 50%, but there are negotiations ongoing. I guess given this kind of picture, is supply chain diversification by Chinese firms still likely to be kind of an attractive proposition for them?
Well, I think diversification in this context is, in the context of supply chains, is going to be increasingly important for firms around the world, not just Chinese firms. And especially if they are dependent on the US market for end demand. Now, the problem comes into play with this. Just as an aside, I dislike the overuse of the word uncertainty in political and economic analysis, but with the Trump administration's trade policy, there's no better word to use. You have no idea what's going to happen from day to day, week to week, month to month with US trade policy. And one of the problems that analysts face, and I can't imagine how much more difficult it is for supply chain managers in these countries, is any conclusion you reach on a Monday might be rendered meaningless by Thursday because something has changed. So diversification will help to alleviate some of that uncertainty, but it's not going to eliminate it, just because nobody knows what the Trump administration is going to do. And anybody that pretends otherwise is selling you a false bill of goods, to use a pun.
You talked about this in your opening remarks, but are there any countries kind of in ASEAN or particular sectors that you see as particularly well placed to see a lot more in terms of Chinese investment in kind of this new global trade environment?
Well, Vietnam has already been a major beneficiary of the China Plus One strategy. And that's not only been other global multinationals, but Chinese firms as well. When it comes to Vietnam, we have to wonder at this point if they've reached capacity in terms of taking in new manufacturing FDI, given the current state of the country's labor force and infrastructure. It's a country of 75, 80 million people. Yes, it's had the infrastructure to take advantage the US China trade conflict up to this point, but in the near term, how much slack capacity is there in Vietnam to draw more investment, in this case from Chinese firms? Indonesia is an interesting example. I mentioned at the outset that Chinese car makers, BYD and others, have invested in manufacturing in Indonesia. Primarily, that is because of Indonesia's supply of nickel, obviously a key component in batteries, and the country's export restrictions on the export of nickel, which has been designed to attract more investment up the value chain rather than just exporting the commodity themselves. So Thailand, I believe, has been attracting more investment from Chinese consumer durables manufacturers. So think of refrigerators, washing machines, things like that. And then I guess amongst the big four, Malaysia, where I was based for 18 months until the middle of this year, there's been some investment in ICT manufacturing, low level chips, things of that nature. All of them really face capacity constraints, though, when it comes to infrastructure and the labor force, I think. So I wonder how much room there is left, at least again in the near term, for these countries to benefit a lot more. And then, as we spoke about already, there's a rising tension with China over trade and investment and jobs, the local labor markets. So that's going to contribute. I think countries in the region are becoming more hesitant to take some of this investment and to be as open to Chinese trade as they have been. How they deal with that is another question.
I want to talk about, from the Chinese side, what does this mean for China's role in manufacturing supply chains? I mean, you've mentioned that, of course, China is kind of the dominant producer of intermediate goods. As this new US trade policy regime, will that lead to kind of an accelerated shift in supply chains out of China, say, to ASEAN? Is it more likely to solidify China's position at the center of global supply chains? And here, maybe we can touch a bit on the topic that you mentioned earlier about a lot more kind of investment and exports of final goods heading back to China from ASEAN and how that fits into this overall story.
Well, for China's role in global supply chains, I think what the US has found already is they're very difficult to replace immediately. I think the goal for the US, just to start there, although this obviously has knock-on effects on ASEAN, the goal is to reshore supply chains as much as possible in the long term. In the near to medium term, they're running up against the impossibility of accomplishing that objective. In ASEAN, it's much the same. If they want to manufacture some of these, key goods, they're still going to be heavily reliant on Chinese supply because they just don't have the domestic suppliers for parts and components that they need for the finished goods. I don't see, as much as some countries would prefer, to become less reliant on China. For a lot of goods, I don't see them being replaced in terms of specific parts and more broadly in terms of the cost. I mean, one example of this, not to change the topic necessarily, but I was in Japan for the 2011 triple disaster, the Tohoku earthquake. And what the US and European automakers discovered very quickly is that their supply chains were heavily dependent on specialty suppliers of parts and components that located in SMEs, essentially, that made specialty parts and components that went into their supply chain. And the supply of those parts suddenly dried up because the manufacturers couldn't operate their manufacturing lines. China is a different example, but it's similar in that trying to cut China out of global supply chains, a lot of companies are going to find very quickly that there's no way to replace that supply, whether it's in the US, Europe, or in ASEAN. So that's a long answer to your question is near term, even medium term, it's going to be very hard to replace China.
That aligns broadly with our view as well that, it is very difficult. China just has such a strong manufacturing ecosystem and just has the ability to produce a lot of these intermediate goods and will still remain a very integral part of global trade for quite some time. I want to come back now to an issue that you've mentioned a couple of times already on the issue of kind of excess capacity in China, the large export goods that are likely now to be destined to other markets outside of the United States, given the bilateral US China relationship and the disinflationary impacts and manufacturing competitiveness impacts in ASEAN. You've talked about, how countries are kind of looking at this at the moment, but do you have any sort of views on how countries might respond to the large surge in exports from China that may be coming their way? And how is Chinese investment in some of these economies kind of a way for China to manage perhaps this new geoeconomic challenge from this potential export surge?
Well, it's an interesting question. I assume you're focusing on ASEAN here. The likes of Malaysia and Thailand and Indonesia in particular, and I think Vietnam as well with steel, have begun or completed anti-dumping investigations and other types of investigation into Chinese trade practices. Whatever the findings of those investigations, it's likely that they're going to have to act unilaterally because, and this is topic for another time, the WTO is no longer a functioning system for enforcing the trade rules. So even if Vietnam finds that China's been dumping steel into its market, or Malaysia finds that China has been dumping, I forget exactly what their investigations were into, has been dumping into the Malaysian market, either they can act unilaterally by raising tariffs and potentially invoking the ire of China without at the same time having the same level of access that they used to enjoy to the US market, or they're going to have to find some way domestically to, well, the disinflationary pressure is going to be very difficult to deal with. Turmoil in the domestic labor market might be somewhat easier to deal with. It was an issue at the latest ASEAN summit, which was in Kuala Lumpur, I believe in May this year, mostly in the context of US trade policy, but there was also discussion at the time of how to respond to the surge in Chinese imports. I don't know that they reached a consensus, and this is the problem with ASEAN. It is often treated as a coherent bloc, but there are often differing views and differing policies among the 10 member nations, and especially, I guess, the ASEAN 5 countries, which is the Vietnam, Malaysia, Indonesia, Thailand, and Singapore, that are often treated as the main countries in the region. And of course, the larger question is ASEAN has been trying to, as a whole, for the most part, trying to not take sides in the US China conflict, whether it's over global trade or other issues. It's likely that some countries are going to have to make a choice, especially if this Chinese surge continues unabated. They're not as well positioned as even the US was at the time of the so-called China shock. They're not as well positioned to absorb it as the US was. So that's a long answer to say I don't have a good answer for that question, but it's going to be an increasing issue for the region, even more so than it is already.
That is something that we hear when we travel around the region as well, is that it will be a challenge for some of these governments to manage this large export surge from China, and how they deal with it domestically, I think will be a very important factor going forward. Well, thanks, Chris, for joining us today and sharing your insight. Of course, this is a rapidly developing situation on global trade front. I think ASEAN-China trade relationship is, of course, growing in importance, and so it's been great to dig into this topic quite a bit more. And I'm sure that you won't be short of work given the rapid trade policy development and looking at supply chain management and things like that. So Thanks again for taking the time to join us.
You've been listening to Fitch Ratings China Perspectives podcast. To learn more about our ratings and research on China, visit us at fitchratings.com. Subscribe to China Perspectives wherever you get your podcasts.